Welcome to this video on the beginner's guide to investing in stocks. If you are new to the world of investing, this guide will help you understand the basics in simple terms. Investing in stocks may seem complicated at first, but once you grasp the fundamentals, it becomes an exciting journey. The stock market has been a path to wealth creation for millions of people worldwide. However, it requires knowledge, patience, and smart decision making. This guide will walk you step by step through the essentials of stock investing. We will cover what stocks are, how the market works, why people invest, and how you can start safely. So, let's begin our journey into the world of stock investing. First, let us understand what a stock actually is. A stock represents ownership in a company. When you buy a stock, you are buying a small share of that company. This means you become a part owner of the business. If the company grows and makes profits, your stock value may increase. On the other hand, if the company struggles, the stock price may go down. In short, stocks allow you to participate in the success and failure of businesses. Now let's talk about why people invest in stocks. The main reason is to build wealth over time. Historically, the stock market has provided higher returns compared to savings accounts and bonds. By investing wisely, your money can grow faster than inflation. This helps you achieve long-term goals such as buying a home, funding education, or retiring comfortably. Another reason is dividend income. Some companies pay a portion of their profits to shareholders in the form of dividends. This provides investors with regular cash flow in addition to potential stock price growth. Next, let's explore how the stock market works. Stocks are bought and sold on exchanges like the New York Stock Exchange or Nasdaq. In many countries, there are national stock exchanges where investors trade shares. The price of a stock is determined by supply and demand. When more people want to buy a stock, its price goes up. When more people want to sell, the price goes down. This constant movement creates opportunities for investors to buy and sell. Stock markets are regulated by government bodies to ensure transparency and fairness. There are two main ways investors make money from stocks. The first is capital appreciation, which happens when the stock price increases. For example, if you buy a stock at $50 and it rises to $70, you earn a profit of $20 per share. The second is through dividends, which provide steady income. Some investors focus more on growth stocks for price appreciation. Others prefer dividend stocks for income stability. Many successful investors build a mix of both in their portfolios. Before investing, it is important to understand the different types of stocks. There are common stocks, which give you voting rights and dividends. There are preferred stocks, which usually provide higher dividends but limited voting rights. There are growth stocks, which belong to companies expanding rapidly. There are value stocks, which are undervalued compared to their real worth. There are blue chip stocks, which are large, established, and financially stable companies. Knowing these categories will help you choose stocks that match your goals. Now let's discuss the risks of stock investing. Every investment carries some level of risk. Stock prices can be unpredictable and may rise or fall suddenly. Factors such as company performance, economic conditions, global events, and market sentiment affect stock prices. New investors must understand that short-term fluctuations are normal. It is important to stay patient and focus on long-term growth. The key to reducing risk is diversification. This means not putting all your money in one stock but spreading it across different companies and sectors. As a beginner, you might wonder how to start investing in stocks. The first step is to set clear financial goals. Ask yourself why you are investing. Is it for retirement, wealth building, or short-term gains? Having a purpose will shape your investment strategy. The second step is to create a budget. Never invest money you cannot afford to lose. Start small and increase your investments as you gain experience. The next step is to open a brokerage account. A brokerage account allows you to buy and sell stocks. There are many online brokers today that make investing simple and accessible. Look for a broker with low fees, user-friendly platforms, and good customer support. Once your account is set up, you can deposit money and start trading. Many brokers also offer educational tools for beginners. Before buying your first stock, research is crucial. Study the company's financial health, revenue, profits, and growth potential. Read about its products, competitors, and market position. Look at past performance but focus more on future potential. You do not need to be an expert, but basic research helps you avoid poor investments. Remember, investing in a company is like becoming a business partner. You want to choose businesses that are strong and trustworthy. A helpful strategy for beginners is dollar cost averaging. This means investing a fixed amount of money regularly, regardless of stock prices. For example, investing $100 every month into a stock or fund. This reduces the impact of market volatility. Over time, you buy more shares when prices are low and fewer when prices are high. This approach builds wealth steadily and reduces emotional decision-making. Another important point is to think long-term. Stock investing is not a get-rich-quick scheme. It may take years for your investments to grow significantly. Some of the world's most successful investors, like Warren Buffett, emphasize patience. The power of compounding works best when you stay invested for decades. So, resist the temptation of frequent trading unless you are experienced. Beginners should also consider exchange-traded funds, also called ETFs. ETFs allow you to invest in a collection of stocks with one purchase. For example, an ETF may include hundreds of companies. This gives you instant diversification and reduces risk. ETFs are cost-effective and easier for beginners compared to picking individual stocks. Many investors use ETFs as the foundation of their portfolio. As you gain experience, you may explore advanced strategies. These include analyzing financial ratios, studying charts, or following market news closely. However, do not rush into complex methods too soon. Focus first on building a strong foundation with simple, consistent practices. The more you learn, the more confident you will become as an investor. Emotions play a big role in investing. Fear and greed are two common mistakes. Many beginners panic and sell when prices fall. Others get greedy and chase quick profits. Successful investors remain calm and disciplined. They stick to their strategy and avoid emotional decisions. Remember that patience and consistency usually outperform impulsive actions. Always continue learning about the market. Read books, watch educational videos, and follow reliable financial news. Learning from mistakes is also part of the journey. Every investor experiences ups and downs. What matters is improving your knowledge and skills over time. The more informed you are, the better decisions you will make. Now, let's recap what we covered in this guide. We learned what stocks are and how the market works. We discussed why people invest in stocks and the different types of stocks. We explained the risks and the importance of diversification. We talked about setting goals, opening a brokerage account, and doing research. We looked at strategies like dollar cost averaging and investing for the long term. We also explored ETFs and the role of emotions in investing. Together, these steps create a strong foundation for your investing journey. In conclusion, stock investing is one of the best ways to build wealth. It requires patience, discipline, and continuous learning. As a beginner, start small, diversify, and focus on long-term growth. With the right approach, you can achieve financial freedom and security. Remember, every successful investor started as a beginner. So take the first step today and begin your journey into the stock market. Thank you for watching this beginner's guide to investing in stocks. If you found this video helpful, please like and subscribe to the channel for more informative content. Your support encourages us to create more valuable guides for you. Stay tuned for upcoming videos on investing, finance, and wealth building. See you in the next video.